Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York. It is Thursday, April 27th, 2017, and this is the Daily Report for Gold and Silver. We have gold trading quietly and modestly higher when we look at futures. Cash market's a little bit different, although the net price is very, very close. Currently trading at $12.6520, putting it up about $1 on the day. Now, the high is quite interesting. It had a high of 71 and a low of 61. And although we've had a compressed or very, very narrow range, both the high and the low are things we'll want to talk about when we pull up our first chart. Over to spot. Spot gold is trading off about $5 on the day, trading at about $12.64, $12.63 and change. When we go over to silver, silver is currently trading off by about 15 cents. It is a decline of about a full percentage point, so silver has absolutely been under some extreme pressure lately. Currently at 17.20. That is the low of the day, and the high is 17.47. As I said, silver is under pressure. And then lastly, spot silver down about 22 cents at 17.24. So traders, although we have had an extremely contracting range, and we have seen a market that has traded under pressure ever since trading to that high at 12.97. Of course, that was recently, and that occurred right in this area, this top, as the market hit some pretty strong resistance at 1300. Even with that, a lot can be made out of recent activity in the market if we look at certain technical indicators and look at where the price falls into relationship of those technical indicators. And here's what I'm talking about. The first thing is to look at a level of support. And my sense is that this area right in here, approximately 1260, 1262, this is our very, very strong support area. And I believe that this area will absolutely hold. It was former resistance, as you can see in this area back at that top, and is now support. The other thing, when we talked about this a little bit yesterday, is the fact that this is also the area where our 200-day moving average comes in, and our shorter-term moving average is getting closer to actually giving us that golden cross in which the short-term moves above the longer-term moving average. That would truly be a bullish signal. Now, what is also interesting is a couple of fib retracements. The primary one that I'm talking about is a very, very short-term fib retracement going from the beginning of this rally that occurred mid-March when the market was trading roughly at 1190 up to this price point at 1297. And when we do that, we get our 23% retracement. That comes in at 1272. And our 38% retracement, that comes in right here at 1256. So, whereas we see this particular area as being an area that is supportive of gold, this band, so to speak, right in here, we do have some minor resistance, very, very minor resistance when we look at the pricing at 72. That was the high here. And then we have a 61% retracement. It's a longer retracement that occurs at 1279. However, my sense is that we will probably find support in this area of about 12, call it 60, 61, and our current resistance still remains right at around 1300. But it is a sloping resistance if we look at this resistance line because it's drawn from the previous highs that came in the market. And so my sense is that the real level of resistance we want to see on a closing basis to actually trigger a buy signal for those that are flat the market is going to be roughly in this area of 1278, and that will be a break above this point. I think that when we see that, that's a good entry level, and then we absolutely need to see it move and on a closing basis inevitably trade above $1,300 per ounce. Traders that are still sitting long have had their stops below 1260, and some are still in, some have gotten stopped out. And so we want to focus on our re-entry point in the market. And as I said, those are the particular triggers that I am looking at. Trader silver continues to trade under dramatic pressure, now trading at 1722, off almost a full percentage points, 0.8% today. the key is with silver, we've seen some pretty strong dynamic downside moves. You can see that with this candle size over these last 3 days. No doubt we have only seen this market trade and open and close higher, on one day over the last week and a half of trading, 2 weeks of trading. Ever since the market topped out roughly at 1866, we have seen a tremendous decline. And at this point, on a technical basis, silver, I believe, still has some ways to go in terms of finding support. I would look for support in silver to come in possibly as low as 1685. That, of course, is a 61% retracement of the lows achieved at 1575 at the beginning of the year up to this yearly high that occurred most recently in April. So it occurred this month, and we've seen a significant decline in the market. When we do that, we can see that there is historical precedence that would suggest that on a technical basis, this is an area, meaning 1685, that we could see silver find support if it continues to trade under pressure. And traders, when we convert our Japanese candlestick chart to a Japanese average chart, we can see that this downtrend, at least according to this study, is still fully intact. For the last couple of days, there have been no upper wicks. You can see that there was an upper wick 3 trading days ago. And so what that tells us is over the last 2 days, at no time during the trading session did the price point go at or above the midpoint of the prior candle. That being said, that the trend still has some steam left, and looking at the basic technical indicators that are telling us that we will probably, in most likelihood, not find any strong support till about 1685, tells me that silver has a little bit further to go. And traders, that is one of the primary reasons, silver being under extreme pressure and gold holding its own and going higher, that we have seen such a dramatic move in the gold-silver ratio. And I began to talk about it yesterday. Thank you for those that sent in responses that want to learn a little bit more. But what we're talking about is this. In essence, we had a pretty dramatic move, up 0.88% at 73.18. And that is simply the number of ounces of silver it takes to buy an ounce of gold. If you look at this market and look at the beginning of this month, it only took 68 ounces to purchase an ounce of gold, where now you would have to add the additional ounces, and now it's well past 73 ounces to actually get 1 ounce of gold. So that we see that this ratio is definitely favoring gold recently. And I believe this is a trend that will continue at least for the medium term. In other markets that we follow, Dow Jones Industrial Average is trading modestly higher, up about 6 points in terms of the close. It is a net change of even at 20,981. Over to the Standard & Poor's, that also tracked slightly, moderately, fractionally higher on the day at 2388. And then the NASDAQ also trading quietly, up 24 points at 6,050. It is surprising that the NASDAQ has absolutely been able to hold on to that milestone of being above 6,000 in terms of points. Now, we did have a continuation of this long-standing sell-off in crude oil. Crude oil still under $50 now at $49.23, losing about 0.75% today to close 36 cents per barrel lower on the day. And then lastly, want to take a look at the U.S. dollar. Again, moderate changes. It seems as though traders and market participants are waiting to see what occurs tomorrow as we go into that showdown to fund the government. We are looking at U.S. equities vis-a-vis the Dow Jones Industrial Average, and though fractionally higher today, in essence, the market closed unchanged. We see both the dollar as well as the U.S. equities markets really fractionally unchanged as we await news out of the Congress, the Appropriations Committee, as to whether they'll create some sort of stop-gap spending bill to keep the government funded through Saturday. Of course, Friday night at midnight, the government runs out of money. We also have a whirlwind of policies coming out of this administration as they try to really prop up their 100th day in office, which oddly enough occurs on Saturday. And whether or not President Trump wakes up to a government that is funded or not will be interesting. We've got changes now in NAFTA. We've got an extremely volatile and geopolitical scenario still really heating up overseas. And that is reflected in the fact that although the market hasn't sold off, it hasn't moved much higher. Now, we can see that the Dow Jones Industrial Average has come just up to, on a closing basis, because when we look at this weekly chart on an intra-week or intra-day high, we've seen it go as high as about 21,200. And right now we're at 20,981. Let's call that 21,000, if we round it up, so to speak. If we draw a line across from the candle which had the highest high on record, we can see that the closes or the current price is roughly the same as where it was. So we are certainly in historical milestone territory. Now, although when looking at the Dow Jones or the S&P, we are at milestone area, the same can't be said for the NASDAQ because we've greatly broken above that. Of course, this is 59,000 on the NASDAQ Composite Index. We are currently at 60,050, so we are still at the highest high point of this week. And traders, look at this tremendous gap between where former resistance was and the breakout that occurred at the beginning of this week took this market. The tech-heavy index is certainly moving in proportion to the other indexes far away from the pack. And traders, in as much as we've really hit a milestone, looking at an extremely long-term view of the NASDAQ, and I've converted our chart to a monthly chart. Each candle represents a month in time. What is most interesting is really nothing else hit that bubble or the crash back in 2000 to 2002 like the tech bubble that we experienced, and the way that really moved the NASDAQ down. If we draw a line across, we can see that really the biggest issue with the NASDAQ, and this of course is extremely long term, was the fact that when it finally climbed back to match these former highs of 2000 to 2002, it didn't do that really until 2015, 2016. This has been the activity, of course, since about mid-2016 or the election itself. And we can see that this market is a runaway market. The NASDAQ has been a superlative performer in terms of the indexes in U.S. equities. While it is quite unlikely that the powers that be, our politicians, will be unable to at least put some kind of a stopgap in terms of funding the government, even if they're kicking the can to May 5th or kicking it further down the road. As I said, it's highly unlikely that they'll let the government run out of money. However, the fact that this 11th hour negotiation is occurring yet once again tells us that the politicians that are really in charge of our country right now are putting their agenda before the agenda of the American people. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.